Good afternoon. Welcome to the TheoTRADE afternoon video. I am Blake Young and today is January 16th, 2025, and we're going to be talking about bonds, utilities, and your other fixed income trades. So normally when we see money moving into bonds, it's a flight to safety. At the same time that we see a flight to safety in bonds, we oftentimes see a flight to safety into utilities as a substitute fixed income trade. And that's what we're seeing today. Today we're seeing bonds continue the rally after yesterday's gap up close higher, and we're seeing utilities be the strongest performing sector of all the sectors. In fact, utilities are already up 2.5% at some points today and 2.2 on the utility index, and we're seeing a lot of strength. And that means we're seeing a 2% recovery in utility prices while also setting up to get paid 4 and 5% return on the dividend or interest rates if you're comparing it to a bond. So let's take a look at some of the data that we're seeing. One, we know that this week has a lot of red. There's a lot of red in the economic data. And even though I don't think all this data is negative, for example, if we really do have PPI slowing down, slower inflation is actually a good sign. We want inflation because it usually accompanies growth, and you don't really have growth without inflation. So we want some inflation. That's why they put it in red when it underperforms. But PPI, Producer Price Index, and CPI, Consumer Price Index, indications of inflation are showing that it's in check or slightly lower than anticipated, but still positive. But it is still seen as negative if that is accompanying lack of growth or actually a compression of growth. And we do see that data in Empire State Manufacturing, a major miss there, and retail sales falling as well. And we had higher weekly unemployment claims. So the big picture is it wasn't a great economic week as far as the reports go, but I don't know if that was enough reason or enough fear that would drive money into bonds. And as we look at the 10-year bond futures, you can see that we bounced off of a key monkey bar, the monkey bar for the year. This is the area that we would consider the beginning of the oversold area for the year of 2025. We dropped down there, we closed inside there, and we bounced out off of a channel, off of a low. And today we're trying to break out of the channel on the high, which would have me looking for bonds to rally another 1.165, so another 1.5 points on bond futures, and that would push us all the way back up into this area and get us closer to the overbought area for the year. So we could reverse and recover most of this sell-off that happened from December until last week. And so bonds are absolutely recovering off of these lows, and they're paying a higher interest rate than they were last year at the same time. If we look at utilities, XLU, utilities ETF, you can see we pulled back similarly and bounced similarly, closing up and turning around ahead of time. Now, in my deep currents class, we use a lot of long-term trend signals, and this is potentially the big long-term trend setup again for utilities as we've maintained the 50 over the 200 and the 40 is now crossing over the 50 on a very strong bullish candle on a lot of volume. So we still have about half an hour. We're going to likely see this continue to hold up and say utilities are a top sector to be considering. And if we were to look at the performance today in utilities, we're going to see that utilities have done extremely well, and pretty much every single stock in the utility sector of the S&P 500 are all either flat or positive, and some very positive, like NextEra being up 2.6%, Constellation's up 4.5%, Duke up 1.9%, it was up 2% earlier, 1.3%. Vistra is all the way up 3.7%. So all of these are performing really well. Now the question is, which ones do we want to trade into? And so let's stick to the top ones, the biggest ones, and look where price is in conjunction with the pullback and with earnings that are up and coming. So we know that they had this major reversal, 86 all the way down to 66. So a 20-point drop, nearly 22% correction on a stock that is paying a sizable 2.9% dividend on top of that potential recovery. And if we go from 70 just to retest the previous highs, that's about a 20% return plus about a 2.89%. Now there's other utilities that have even better returns on their dividends and that look a little bit better than the price pattern. I do like this one, but I would like to see NextEra get through the high of about 78. Now, if we're going to take a look at something like CEG, which is promising, CEG broke through to a 52-week high. So they didn't even deal with a pullback. Their dividend is low, but they broke through this recent high, and a new 52-week highs is actually a trading strategy that some like to use, and I think it is a reasonable approach, because if we simply replicate these pullbacks, these rises and drops through here, we're looking for probably another 20% on the top side as well. But let's start with targeting 10% on the break, and I would say that puts it up to about 335 to 340. So still bullish, still climbing, looking pretty decent on that new 52-week high. Vistra also put a shadow through that high. I don't know if that's a strong enough breakout for us, and they're holding up there as well. If you want a little bit better move and a higher close, then the move here could repeat, and we'd be looking for 130 up to about 165, 170, so another 30, 35 points on the breakout, assuming that's going to happen over the next day or two. Now, a couple of my favorites to look at are Southern and Duke. Southern is a cleaner bounce off of this low. Southern has a higher dividend. Southern entered the oversold area of the monkey bars, traded through this high. So whether I'm doing a price pattern or a monkey bar type of trade, we've cleared this recent high on a bounce, and we're already discounted. Southern also offers a 3.45% dividend based off of its history, and we could see this rally from 83 all the way back up to 94. It's about a 15%, so it's not as big of a move as far as percentage as some of the others, but it is still about a 15% move in recovery plus a 3.5% dividend rate, and we're clearly putting in a bottom here as this price is closing above the recent highs, erasing about 6 weeks worth of price action. So probably one of my favorites in general, but also on the setup. Dominion is getting close to the same type of setup. Be aware, all of these stocks have earnings coming up, but Dominion is getting very close to a similar setup that we just saw in Southern. And then Duke Energy. Duke Energy is almost doing the same thing that with the Dominion and Southern have done, and they offer a 3.85% dividend, so that one of the highest dividends of the utility sector. And so if we can bounce and break through here, Duke should take us from 108 to 121. We're looking for, and I'm just going to round that off at about $14 move, and so again about a 13 to 15% recovery in price, while also gaining a 3.85% dividend. Now, the reason why people will go here and speculate and assume that this is the place to go is not because they're really speculating. It's their risk aversion. They're looking for, how do I get a steady return, a steady yield when things are uncertain in the markets? And what we're seeing now in the markets is a significant bifurcation or splitting. We see half the sectors up, half the sectors down. Some sectors down about 0.5% at this point, so most have recovered. But we were earlier in the day seeing 2% up in some sectors and 2% down in the other. There's this movement of money. And when we see that, while bonds are rallying, it appears to be more of a defensive play, a flight to safety, which means I will be looking for utilities, consumer staples, and healthcare, but specifically utilities as a substitute to bonds, as people may not want to be bond buyers, or are maybe even concerned about default risk in the U.S. government, but still want that safe percentage return. And saving may be the best for last. We don't know. We don't know whether this is going to be the best for last. I like the pricing better on Southern, Dominion, and Duke, but Exelon had the top performing day. It performed 3%, rallied 3% today. And off the lows, we've already gone from 36 to 39, which means we've gone about 10% off of the lows, 3% today. And if this is the reversal, 41 is certainly an easy target, which means you have an additional 10% roughly on the next move. And they offer a dividend that is 3.88%. So there's lots of opportunities, lots of stocks to select from if we're going to see this move back into safety, back into what we call a fixed income substitute or a steady return, similar to those that you would get in bonds, that is required by law that these utilities pay you out those rates. You could just simply trade XLU. XLU will give you the diversification across those. You can see a similar breakout through the recent highs. The average dividend yield in XLU, because you're getting the proportional dividends from each of the stocks in XLU, is 3.2%. and a return back to the high as a diversified trade, though it's slightly lower yield than some of the others, still provides you another 5 to 10% increase plus a 3% dividend yield. That's going to do it for me today, but join Brandon and I tomorrow as we continue this discussion of what the market is doing, whether they're bull traps, bear traps, whether we're seeing shifts in the econ, whether we're seeing inflation or not seeing inflation, and whether it is time to be more defensive. Is this a defensive market, or is this recovery and we're going back into the bull market trend? So join us tomorrow morning at TheoTRADE Live, and otherwise have a fantastic night.